Hello traders, this is Dave, aka DREBG, senior member at informedtrades.com. For those of you who aren't familiar with Informed Trades, I welcome you to go over and poke around a little bit, see all the free stuff they have over there, great information, great traders. I have a blog there. If you want to drop me an email, I'll be happy to answer any questions you might have, but it's just a great site for traders to go, learn, and contribute. So today is April 16th, the day after tax day. Hopefully everyone got their taxes in. It's 10:45 in the morning, and what you're looking at is the pound-yen foreign exchange pair. In the middle here, we have the RSI in a 14 period, and the traditional MACD with its histogram. Here we have the 21 EMA, this is the blue line, and the 200 EMA is this dotted brown dashed line. This is the 4-hour time frame. And what we're going to talk about today is how to mark up the chart, at least how I see it, and try to see where we think this pair might be going. The first thing I do is I look at a pair like this and I squish it down a little bit, try and get an idea of where price action has been, and mark up where we think the significant levels are. And I mean, the first thing you do is just draw in some trend lines. I mean, there's some pretty basic ones in here. If you look here, this looks like a pretty good area. We got a touch here, and a touch here, and a touch here. If we add in some more, this seems like a pretty good area. We have a touch here, and a touch here, and a touch here. And you know, just going through and marking up those price levels that seem to be significant will help when price action gets up or down to those levels. Here's another one here. We got a touch here and a touch here. So that gives us a good idea. Remember, this is a 4-hour time frame, so there's a pretty big swing here. We don't need to do a whole lot more with this. But maybe just one more on the top to give us an idea of where the most recent swing highs were. And you can see that price action's been in this range here recently. Additionally, trend lines. Trend lines are always a pretty good idea, and if we draw one in here, lo and behold, we got a touch here, and then we just had one. And also, area of confluence at this level at 44.95. It's pretty obvious that this gives us some room to play in. But this is subjective, because if I took the trend line and drew it here, because remember this area was broken, so we could technically draw a new trend line here, and if we did and we connected these levels, something starts to come out to show that maybe we broke a level here. I'm going to leave it here for now, because I think that seems to make sense, and I'll show you why. And then the other big thing is to mark off some supply and demand areas that haven't been violated. This area in here represents a pretty good area of supply, and the reason that is that you can see price action moving away from it here and moving away from it here, and again not going above it here. So this area here is a pretty good area of supply. We also try and mark off any sub areas of supply, and that would probably be somewhere around here, again where price action is heading north, screaming away, if you will. When it revisits this, we expect it to perhaps pause or even reverse. And of course there's some major levels down here that we can see. And as we do this, we'll zoom in, I've been drawing my channels or triangles, what have you, on the RSI that match up with the price action, so we can get an idea of where price action may be headed. So what I want to do is I want to grab my channel drawing tool and draw a channel where I think price action would fit into. So I'm going to draw this in, and I'm going to make it look something like this for now, and then we start to move it around to see where it makes sense, and we have some touches. So as you can see here, we get a touch here and a touch here encompassing all this price action. We have a touch here, and we don't have another touch on the bottom yet, but I'm okay with that, and I'll show you why in a minute. There's our channel there, and then when I take it and I draw it on the corresponding high and low for the RSI and make some touches on the correct areas, we can see that there's definitely something going on as far as where RSI says price action is going. So let me zoom in a little more. I'll show you what we've finally created here. It looks like a mess, doesn't it? But when we zoom in on a higher level, not a different time frame, same time frame, but just so we can see candles better, that long-term yellow trend line on the bottom, look at this. It was broken. It went back up and retested and then got rejected. That's important. Again, this is the other long-term trend line that got respected up at the top. And we also have price action not being able to break above this red level, this 144.85 level. when we factor in the channels, we haven't broken the channel here, but look where price action is on the channel down here. And then take a look at MACD. MACD has crossed the zero line. We're definitely crossed over. But what's really, I think, important here is that traditionally what I've been seeing is that when RSI breaks this channel, it oftentimes happens before it happens in price action. So that, let's see if we can change the color here, so that it's almost something that could be indicative of where price action is going. And in fact, it's been fairly successful for me lately as I've been testing it out. So you can see here, price action doesn't look like it's going to break its channel yet, but RSI looks like it might break its channel. And when it does, it oftentimes can get you in early because price action hasn't done it yet. But when you factor in the fact that MACD has crossed its zero line, and then you take a look at some divergence on MACD, I mean, geez guys, it doesn't get much more blatantly obvious than this. As far as MACD divergence is concerned, here's the here's the line on MACD. If I draw that same line on price action, I mean, that's about as divergent as you can get. This is pretty heavy duty stuff. Watch when I back off. See this purple line up here? It's a little difficult to tell. Let me change the color of it so you can see it better. There's the MACD divergence that I'm talking about. And it's important. MACD obviously has been kind of divergent for a while, but the fact that it's now crossed the zero line for a third time is important. And I really think that we are going to revisit at least this sub-level of demand here. As we see, it screamed up, bounced around, and then looking to come back. And the question is, where do we hone in and try to get an entry? We could put a limit order and maybe get short here, or maybe we let price action come down, retest this channel bottom, and then continue. This seems to make a lot of sense as far as a good risk to reward ratio. And what I mean by risk to reward is that if we measure where price action is right now, again, look at this, we're looking to touch this new price level that we already identified. My guess is it's probably going to bounce a little bit off of this and then come back down, so maybe we won't enter right now, but maybe a little higher. But if we measure, let's say we enter here, if we measure to the top of supply, which is beyond where we're at now, that's 300 pips. Now that's a lot, but for this pair it's not. But then if we also measure downwards to roughly the middle of the demand level, we're talking about 370, maybe even 400 pips before we really reach this next price level at 138. So let's call it 400 pips down, and let's say just to get above these swing highs we're at, we'll call it 300 pips up. And that might be worth taking. Now obviously your position size can't be very big, but all in all, I think this makes sense, and I think I'm going to take this trade. So when you see all of this and it looks funky, remember that when you load this up originally, this is what it really looked like. But when you start putting it all together and build yourself a framework, then it seems to make a little more sense. So I hope this helped. I'm going to place this trade and I'll open something on the blog that allows you to see the progress, and we'll see what happens. So thanks for listening, and I hope it helped out. Thanks. Hey guys, it's a little after I recorded the first part of the video. I just wanted to let everyone know that I am going to try and enter a limit order, I think, on the pair, and it's going to be, this pink line here is 142, this red line is 145, and this bottom line is 138. What I'd like to do is enter somewhere around the 142 level, maybe even a little higher. If we go 350 pips back, that gets us above this supply level, and that also gives us a 1-to-1 ratio of 350 pips down right into the middle of demand. So that's the plan. I'm waiting a little bit because I am a little concerned that we would be selling into a demand area, so I want to see if we can bounce a little bit more. We have broken the RSI channel, so that's positive, but it is, in the afternoon on a Friday, so we want to be careful here. Maybe even wait for Monday morning, but I just want to give you a heads up. Thanks.